Jason B. B?
It's B. B for Bennett.
Bennett. That's a great name.
Tony Bennett.
Bennett, eh? Is that why your
My
parents
mom,
named
I
you?
think my mom liked Tony Bennett.
Tony Bennett, eh? He's a good one, eh?
What's your middle name?
You don't want to know.
No? All
It's one of those names
We'll talk off air.
off air will, it starts with a C and spelt L-A-R-K. Clark. I'm like Clark.
Well,
But
that sounds
my mother had a brother. He passed away. They wanted to name me Clark. My dad fought for David. So I got David and Clark, right? So it's all good. On today's episode of It's Your Wealth, we're going to talk about what a Donald Trump presidency, now that Trump is officially in office, could mean for Canadian pocketbooks, Jason. So playing on a familiar saying, if America sneezes and the world catches a cold, Canada is the first to get sick. So we are their biggest trading partner. We are neighbors. Obviously, we share a border as long as you can see. But as Donald Trump prepares to take office for a second term, Canadians are embracing for a range of policy changes that could potentially affect our economy and, by extension, our pocketbooks. While stock and bond markets are already reacting to the change of presidency, but just how far will Trump go on issues such as trade, immigration remains to be seen. But here are some thoughts that some economists that we've been watching and reading are predicting moving forward.
Yeah. So you said trade. Let's talk about trade, and obviously one of the big words over the last few months was tariffs. So, but just a couple of stats before we get into the whole tariff situation. Canada and the U.S. are obviously super close. We have daily trade, topping $3.6 billion, according to the Canadian Chamber of Commerce. Canada buys 3/4 of Americans' merchandise exports to the tune of approximately $500 billion a year, and nearly $600 billion of Canadian exports go to the United States. So obviously a big deal. Trade is again obviously very important to both Canada and the U.S. And when you talk about tariffs, sounds good. When Donald Trump talks about tariffs for Canadian goods, sounds good. But on the other hand, it can have some dramatic effects on U.S. consumer and their companies.
I can't figure it out. Like, I really can't figure it out. How is it that when American importers bring stuff from Canada in and have to add a 10 to 25% tariff, which it isn't us who pays the tariff, it's the U.S. consumer who pays the tariff. I don't get it, right? And I get it if you're trying to buy American, but man, how does that not take inflation back up to where it was 6-12 months ago?
Yeah.
Right? And then does Canada, on the same respect, then say, well, if you're going to tariff us, on our products coming in, so no one buys them, obviously, are we going to have to tariff American products?
Yeah, and I think we provide so much of some big heavy duty industries. So, for example, the lumber, potash, which goes into so many agricultural things. Like, there are some big impacts on the U.S. consumer, and if we want to bring some inflation down, I'm not sure tariffs are the right way to do it.
Right.
So, when you talk about tariffs, again, you said 10 to 25%. One of the sectors that it could have a dramatic effect on is the energy sector. But I think, there's lots of talk that the Canadian energy sector, it's going to be able to withstand some of the tariffs. But if they ramp up, if the Trump administration ramps up some oil production, as we expect, and the cost of oil goes down, that's going to have a dramatic effect on the Canadian producers and the exploration companies.
Well, you hear about Alberta, how much oil they have, and again, there was the premier was on Fox News a few months ago talking about how much oil we have in reserves, and again, I think America needs the oil. They need the electricity, the hydro, whatever. So I'm not sure how that's going to be impactful. Hopefully, it doesn't impact on the tariff side as we anticipate. What I do want to get into next, Jason, is some of the cost of living expenses with a Donald Trump presidency. So for consumers, the upside of lower oil prices, which could happen if the U.S. starts to produce more oil, there is a savings at the gas pump and a reduction in overall energy costs. But however, the tariffs remain the biggest threat to Canadian pocketbooks. One of my concerns is what happens with all the stuff that we bring in from the U.S. We bring in tons of cell phones and computers and things like that. I mean, at some point that has to get passed on to the consumer. Ahead of the election, a month or two ago, Desjardins economists suggest that a Republican sweep, which happened, would result in a much higher drop in Canadian GDP by the end of 2028. So Desjardins is saying that Republican sweep, we're not going to produce as much output in this country as we have in the past. A second Trump presidency from the Desjardins report said it would likely lead to lower global and U.S. GDP, which again, combined with higher tariffs on U.S. imports, would reduce the demand for Canadian non-energy exports, again, leading to higher energy costs for goods and for consumers, and again, lower corporate profits. Furthermore, Jason, the Trump tax cuts and larger U.S. deficits could fuel inflation. God, I don't want to see inflation go back up again. I mean, we had a terrible 2022, but higher inflation could lead to higher interest rates, and again, than we currently expect. While a recession may be avoided, and hopefully we don't have a recession going into 2025, but keep in mind that policymakers have to be advised to hope for the best, but plan for the worst. And, I think about right now how you're finally getting all of these mortgages come due and people are kind of slowly getting back into their life again. Home sales have been flat for a long time. We do need to get this economy up in Canada up and churning again.
Yeah, absolutely. And one of the things, though, has done very well over the past couple of years is the stock market. So what are the thoughts of what's the stock market going to look when as the Trump presidency goes into its first year? And obviously we talk about the tariffs and the economy and things, and while the broader economic environment during a presidency can be a drag on Canada for some of those tariff and trade reasons, it does bode well for the United States, in theory. So if in theory that the corporate income tax cuts and deregulations in the United States, that should bode well for the American stock market, which should spill over into the Canadian stock market. So, we do expect there to be this to be a positive, at least temporarily or initially, a boom in the stock market.
Well, based on our last show from last month, we talked about how the projection of returns in 2025 in the U.S. on the S&P 500 are in that 9 to 15% range, and there's expectation that Canada could do as well as the U.S. So hopefully the market doesn't feel the impact of all this political arguing and disagreements and fighting and tariffs and so on.
Yeah, agreed. Some of the sectors that they've talked about that should do well and shouldn't do well. One of the sectors analysts are predicting is the energy sector. The Trump administration should be more, or at least they talk about being more friendly to fossil fuels, less friendly to renewable energy companies. Pharmaceutical and biotech sector, with Robert Kennedy being the head of the health department, the pharmaceuticals are a little bit shaky. They're saying, he's an anti-vaccine activist. So if he's controlling some of those health policies, it might be a bit of an issue for them. The EV, it's funny because on one hand it's negative on the green energy, but on the other hand, the electronic vehicles, with Elon Musk being such a big part of the Trump administration, and he's obviously owns Tesla, maybe that's going to be a good thing for electric vehicles.
Right. On the interest rate and mortgage side, rates here in Canada are heavily influenced by U.S. economic trends, meaning a Trump presidency could have a ripple effect on Canadian mortgage rates. rising U.S. bond yields driven by Trump's potential expansion, fiscal policies could lift Canadian bond yields as well, affecting mortgage rates in Canada. We do know that as those bond yields go up, so do interest rates, and as bond yields go down. You know what, Jason, the correlation between U.S. and Canadian interest rates has historically been strong, with about an 0.88% correlation. So we tend to follow, in most cases, what the U.S. does. So again, Canada's prime rate and the U.S. Fed's fund rate, do typically go in a pattern, meaning that Canadian borrowers could feel the effects quite quickly. On the housing market front, a Trump presidency could indirectly influence Canada's housing market, especially if U.S. policies prompt a few Americans to decide to, hey, I think I want to leave the good old USFA, and I want to leave who would want to leave Phoenix, Arizona in the winter and move up to Calgary? I have no idea, but I'm sure a few want to leave, Trump country if they're Democrats, but we're already seeing it, right? We're seeing right now there was an increase on some web-based searches of Canadian properties in major cities, according to Royal LePage. Americans could bolster demand in high-end areas like Whistler. Restrictions on foreign ownership might curb their ability to buy a non-recreational property. However, a weaker dollar. I mean, again, if you're an American right now with $1 million in cash, your American dollar's worth about $1.4 million Canadian, and that's not a bad deal if you want to, at some point, move out of the good old US of A, come back to Canada. And again, Jason, tighter immigration policies as well. We do know that Canada's putting, Canada has pressure on them from the U.S. to start understanding and getting their head around the border crisis that we have. I mean, I'm not sure it's that big of a deal as opposed to what's happening down in Mexico, but again, that's a buffer, of risk in the housing market. So the bottom line, I think, right now is that, if you're an American, you're going to have to deal with this president for 4 more years. If you're a Canadian, 4 more years as well. But we have an election, I hope, coming sometime in 25, and we'll find out that too.
It'd be nice. And last point, you're talking about the Canadian housing market. On the U.S. side of it, again, you mentioned the idea of the U.S. dollar. For those snowbirds that are down in Florida or Arizona, they're getting socked pretty hard with $1.40 plus dollars. So that can dramatically affect whether they want to go down there. And they must be a big part. I don't have the numbers, but they must be a big part of the economy, whether, again, in Arizona or California. Are you going to want to buy a place? Are you going to want to go down there? Maybe you go, instead of going skiing in Killington, or you decide to stay in Quebec, or you decide to go to Whistler. So I think there'll be a dramatic effect as well.
Well, you know what?
Because of the dollar.
It's hard, right? I mean, at the end of the day, you can't just cross the bridge anymore and go shopping in the U.S. Going for dinner, $100 U.S. is 145 Canadian. That exchange rate is a resistance factor, right? It is for me. I'm sure it is for you and everybody else. So, who knows what's going to happen? I think at the end of the day, for me, is I'm trying to not get too caught up in the political conversations, the CNN, the Fox News. It's what's going to happen is going to happen. I'm hoping that when Trump gets in, he decides that Canada is his friend and not his enemy. Obviously, the border's a big issue and immigration. So hopefully they'll get that figured out, and then we'll have a happy border, a happy friend to the south, and
good relationship.
Life will be good for Canadians and for Americans, right?
Agreed.
Yep.